Day trading is extremely tough. It's one of the toughest things I've ever done in my life. First off, the game is kind of rigged against you, okay? They need retail traders to come in there and they need you to make their money, right? So you got to understand that first of all. Now, is it impossible? Of course it's not impossible, but I guarantee you've been racking your brain trying to figure this out. Maybe at the end of the day, you're looking at charts. Man, if I just bought down here and then I sold up there, I could have made thousands. And you just want to make $10,000, $15,000 a day. And I see people doing it and I want to make a ton of money. I just want to sit here and click buttons. Man, it is a hard game. There's a ton of emotions involved. The system is rigged against you. How many times has it gone just below your stop? You're thinking, oh my God, I can't take this anymore. I've lost too much money. I got to get out. And the second you get out, it screams up in your direction. You could have made some money. I guarantee that's happened to you because it's designed that way. They know what you're doing. So you have to recognize this. You have to accept this and you have to work on it if you want to be successful at day trading. But there's good news. There's a million different ways to make money in the market. That's what makes it so wonderful. So in this video, I kind of want to break down some different ways to look at making money in the market instead of just sitting here and day trading. Two different options, kind of picking a stock on the way up and then taking advantage of a way that you might not even be aware of on the way down so that you can make money in all kinds of different avenues. So in this video, I just put on a trade myself. I'm going to show you what I'm in and what my thought process was behind it. And I'm going to show you what I'm going to be doing in the next kind of maybe 2 or 3 days to take advantage when the stock starts to cool down. I'm going to break it all down for you, show you exactly how to do it. So by the end of the video, you're going to kind of have a new idea and kind of some new avenues that you might want to look at instead of racking your brain in day trading and just kind of beating your head against the wall thinking, man, why can't I get this? So let's go the route of less emotions, less stress, less problems, and kind of really start to make money in this market. Let's get started right now. So the stock I'm looking at today is Healy, H-E-L-E. You can see it up here on the 15-minute chart. And what I like about this stock right now is it's definitely super overextended, but we had this really nice rush of volume here, and they just basically had really good earnings. So they came out, they had a Q1 beat, they had good earnings, and they forecasted that they might have good earnings going forward. That part doesn't really matter to me as much. What matters to me is the technical aspect of this, and I'll show you why. So we've kind of had a nice little run here and we had this good earnings and we've popped up over top and we've had that nice volume. So to me, that means that there's a lot of people that are jumping into this trade. Now, what can happen a lot of the times when something gets extended out over the Bollinger Bands, 90% of the time, actually, the probability is that it wants to make its way back into the Bollinger Band. So we can see here it extended out, it came back in. Here it extended out, it came back in. Even on the downside, here it kind of, I don't even know what happened on that day, but here it extended out, it came back in. So 90% of the time, price wants to be within the Bollinger Band. That's the blue lines on either side here. So taking advantage of that, I want to, the first day of the run, typically I see it kind of continues for a day or two more. So you have about 3 days of continuation because people kind of see, oh, wow, this stock is really blown up. Oh, wow, good volume. Oh, let me look at this. Oh, they had really great earnings. Oh, I'm going to jump into this, right? And also you have the kind of insiders and people with way more money who bought it down here and they want to kind of extend that out as much as they can. They need the retail traders to come in and kind of buy that stock from them, so they really pump it up this way. They sell their profits to the retail traders thinking, oh, this thing's going to go to the moon, and then the stock kind of dumps down on you. Okay, that happens over and over and over and over and over again. It's not a guarantee, but that's usually what happens. And just the absolute probability of the 90% of the time of the Bollinger Band, I like that technical aspect of it. So what I've done here is I actually bought one call here, you can see. So I was up 40 bucks earlier, kind of had a bit of a run, but I'm only up $5 right here. But I'm going to try to take advantage of the kind of 2-day pump up here. So we'll see what happens. It could be wrong, but I just went... the one I bought was just 4 days out, so it's just to finish the end of the week. I bought this contract right here for $3.80, and we'll see what happens if it continues, because if we look at the 1-minute chart here, we kind of need like a bit more of a push at the end of the day. It's following VWAP really nicely, so we'll see what happens if we get another push. I could be wrong on it, but I'm trying to take advantage of kind of that 2-day pump. But the real trade that I really want to be putting on is called selling vertical spreads. So what I want to do is, because here on the chart, let's go to a daily, because we're so extended over the Bollinger Band, and I just told you all about the 90% chance or whatever, I want to sell calls up here. So I buy them for the 2 days, take profit as it goes up on its run, but now I know it's super overextended, so I'm going to want to sell calls up above here, because if I sell a call for a credit, I can then buy it back later when the stock wants to do its push down back into the Bollinger Band, and it cools down and the big boys sold to the retail traders and all that stuff. And I'll show you a perfect example of that happening where I actually did videos on it before. I'll show you that at the end of the video so you can see proof of what happens. So we have this nice push up. Now we want to sell calls. Well, how do we do that? What are you talking about? You come over here to trade. This is Thinkorswim. And I come out to about 39 days. 30 to 45 days is great for taking advantage of something called theta decay or time decay. The calls will become worthless as time goes on, right? So I want to take advantage of that. So instead of buying the option, I want to sell them. So I come out to 39 days, 18 August, right? And I'm going to look for something called delta. So we can see here delta. And delta is essentially saying there's a 26% chance that price will get to 145. There's a 35% chance that price will get to 140. Well, what does that actually mean on the inverse? If it's 26% chance, then that means that there's a 74% chance that price won't actually get to that, right? So if there's a 74% chance, probability-wise, that price wouldn't get to 145, and I sell the calls, and I have a 75% chance that it won't get there. So if I sell this call up here, right, at, let's go right-click, sell, you go to vertical, okay? So a vertical spread is selling, you can see the -1, the 145 call. So I'm selling the 145 at 267, and then I'm at the same time buying at the 150. So the 150 is farther out, so it's going to be cheaper at $1.82. Now, if I'm getting a higher credit than what I'm buying, that means I actually get a credit of 85 cents, 87 cents now. So I'm actually getting credited in my account when I sell these options at 87 cents. So that would be $87 because each contract is 100 shares. Let's analyze that a little further. I right click on Analyze Trade, right? And I come here. I already had some set up here, but let's just look at this one for a second. So I'm analyzing this, and let's go to 3 contracts. I like to do 3 contracts right now. So the blue line is showing my at expiration profit and loss, and the purple line is showing me real-time profit and loss, okay? So you can see here, if I sell 3 contracts at 80 cents, I could make down here $240 as long as the price of the stock stays below 145.83 cents. I will make money. If I come below here, I will make below 144 too. I'll make the full profit, okay? Now this is what's really cool. Look at this. It's actually showing me there's a 76% chance that the price of this stock will be below this yellow line. So I have a 76% chance of success. Now, it's not a guarantee. It doesn't mean, oh, I'm just going to put this on, I'm going to make money all the time. Of course, the stock could kind of go on a heater, like I'm saying. Like, that's why I bought the option. We might end up coming up to 141 and stuff like that. So I'm going to wait to see what happens over the next couple days, sell off that option contract, book in the profit. Now I'm going to know that it's super overextended, and I'm going to sell the call up here. As long as the price stays, and I'll get a higher credit. So this won't be 87 anymore. If the price is at 140 now, it will be a higher credit. Like we can see here, the price is currently at 131. If I went ahead and I sold the 140, 145 vertical spread, I'm actually getting a $1.30 credit, so I'm getting more. So I would actually make, if I was doing 3 contracts, I could make $381. Now you might be thinking, well, 240, 380, that's not enough money. I'm trying to make 10,000 a day. No, okay, that is the wrong mentality, and that's why you're getting in trouble. And trust me, I know why you feel that way because I've been there. You want to make 10,000 a day. You see these guys on YouTube making all this money. I want to just click some buttons and make money. If it was that easy, everyone would do it, and no one would be making money. Okay, it takes some work. It takes control of the emotions. Now, what this allows me to do is to be a lot more calm, because I can sit here and say, okay, as long as the price stays below 141.23, if I was to do this trade right now, right? As long as the stock stays below this red line, I'm going to be able to make some money. So it allows me to kind of be a little bit calmer. I don't have to sit here on the 1-minute chart and be like, oh, okay, it's up, it's down. Oh no, it's broke my stop loss. Oh, it went below VWAP. Oh wow, look at that. It went, and then it flies up here. This is why you're getting in trouble, because you're looking at it with a microscope and you're like, give me $10,000. That's not going to happen, right? If I step back, chill out for a sec, take a minute and really look at it, I can kind of calm myself down and be like, okay, over the next 2 days, I'm going to ride this up with the option. I'm going to sell that off, and then I'm going to sell the options and take advantage of time decay and, you know, the stock naturally just trying to come back down, because remember, 90% of the time when the stock gets extended out beyond the Bollinger Band, it wants to make its way back in. So it's going to want to come out. And when I sell the option up here, as long as the stock goes sideways, even if it goes up a little bit, and if it crashes down, 3 ways for me to make money. Okay? So I'm giving myself a ton of different ways to make money here, rather than I gotta buy this thing perfectly and it has to rocket up to the moon for me to make money. So we're giving you different avenues here to actually win. And it's calmer, it's less stressful, and overall you can control yourself a lot better, and you can slowly grow that account a lot more like a business. Now let me show you. I just did some videos on this. Generac, exact same thing happened, okay? I bought in here when we had this nice breakout. I made some money up on the options up here. I knew it was overextended, and look how it's not even as overextended as what Healy is right now. I sell the calls up here, I make some money on the way down, and I do believe that this could be a good run up in the future over the summertime. So I've been able to buy more options on this at this position now at a cheaper price for a hopeful kind of run, continuing more back up into this area here. And that's far out options. So this is a much more calmer way to trade. I'm taking advantage of multiple moves within one stock. I'm getting to know the stock a little bit better. If you want to learn more about vertical spreads and kind of get really into it, there's tons of videos on my page where I break it into more detail. If you stuck around this long, I wouldn't mind a like and a subscribe if you found some value. And I hope you really learned something today that can kind of put you on a better positive path. Thanks for sticking around. I'll catch you on the next one.